Now that Sophie and Alan have mastered the fundamental principles of preparing a business plan, they need to start writing it. We saw in the previous chapters that a business plan is comprised of different sections. We are now going to look at each of these individual sections in detail below. Sophie and Alan are assisted by Mark, a business activity expert. In this chapter, we will develop the textual part of the business plan. The financial forecasts will be addressed in the following chapter.
The main objective of the section entitled The Founders and Their Team is to demonstrate the alignment of the team-project mix by indicating the individual competencies of each team member, the experience acquired if it matches the project, and the project's guarantors, generally significant actors from the sector. This section includes the founders' CVs, which show their strengths, their experience, and their previous roles. Entrepreneurial activity looks to the future, so planned future hires should be presented. Experience shows that for a company to survive for 5 years, the project owners must perfectly understand the business sector. The offer, whether it is a product, a service, or a concept, is a showcase for the customer. It is what he or she will see. This second section should go into more detail and show what the offer actually is, its form, its cost price, and its sales price on the market. Taking the example of a product, it will describe in the utmost detail all of its characteristics. It should respond to the following questions. How will the product satisfy customer needs? How will it create value for the customer? Does the product make use of new technology? Is it a breakthrough product compared to the competition? This section should also set out the product's manufacturing process. Now let's take a look at services. Using a consulting firm, for example, we should describe the conditions under which the service will be provided, as well as setting out what is included in the service offering. For example, we should specify what the client will receive in return for paying the fees, as well as the timetable and the different phases, and the team members who will work on the project.
Now that the previous chapter has taught us how to prepare the textual part of the business plan, we will look at the financial sections, which Sophie and Alan will have to prepare with the assistance of Julia, their financial expert. We firstly tackle how to prepare a seed funding plan, before examining the operating performance measurement tools. The financial forecasts translate all of the elements developed in the textual section of the business plan into numbers. In other words, the overall strategy and the marketing policy, taking into account the constraints and risks identified in the market study. In this sense, the financial forecasts should reflect the vision of the market and the strategy adopted. They can be used to assess whether the funding package balances and to forecast the project's expected return. They can also be used to compare the actual results obtained with the figures forecast in the business plan. The business creation process goes through 2 phases between the first seed of an idea to finally bringing the project to life. The first of these, the so-called startup phase, includes actions designed to ensure that the business is launched under the best conditions possible. For example, finding and equipping the premises, determining the degree of investment required, and the level of guarantees against future risks. The second phase is the operational phase, when the business is actually launched. Each of these phases involves inflows and outflows of cash that you will need to forecast. Because knowing how to manage is first and foremost knowing how to anticipate. We will now look in more details at what financial forecasts actually are. What do we call costs that vary depending on the volume of activity? Congratulations, that's the right answer. Variable costs increase or decrease in proportion to the volume of activity. What is the other name for the level of activity where turnover and costs are identical? Congratulations! That's the right answer. The level of activity where turnover and costs are identical is known as the break-even point.